Alright, this video is going to be to explain a crude oil trade using the NOFT, or the Ninja Order Flow Trader. Now, you can go to redbridgecapital.com, I think it's .com, but put it in Google, red, like the color red, and then bridge, like a car would go over bridge, redbridgecapital.com, or in Google, and look it up, and then you'll find some videos on it and all kinds of things, and figure out what the pricing you have on it now and everything. I do not get any compensation from them or anything like that. I just use their product. I like the product, and be sure and read the disclaimer at the beginning of the video. I'm not endorsing you trade. I'm not telling you to trade or anything. What works for me most likely might not even work for you. So just keep that in mind. All right. They got a new update with the NOFT, and they've added some things. And I'm not going to go through everything that they've done, but I'll go over some. They've got a thing for sequential decline, meaning that the numbers get smaller as in the last 3 digits at the high and the last 3 digits in the low. If you set it up that way, you can set it up for different things. Let's go into indicators here, and let's go to this is a reversal alert, which is the sequential decline. I've got it set that the blue box, I got the blue box where the most volume took place, has to occur in the upper 30% or the lower 30% of the bar. All right, and I've got it set to where it has to make a higher high or a higher low, or lower low, I mean, and you can turn them on false, and they won't, and that'll take the filter out. That's what I got these set for. So there's videos within the NOFT when you buy the NOFT that explains this in much greater detail than I'm going through here. You can change colors and do all kinds of things. There's some things up here where you can set horizontal volume on this thing. And I got it set for minimum stack size of 24, so at least 24 has to come through. And I'm still working with this, but it tells me where a lot of volume came through, and it'll mark it off for 50 candle bars, and then it'll stop measuring it. All right, and let's see. And that's for the horizontal, and there's a vertical right here, the vertical down here, and I got it set for 39 stacked up and down. Vertical would be up and down, and horizontal across. So it'll do that. And like I said, they got videos that explain it in much more greater detail, and later on I may make a video that explains it, because I think that's in their hub where only the people who own the NOFT can see that. But it's no big secret or anything. I don't suppose. You still got to buy the product to get it. All right. What I got here is I got the sequential decline. Like I said, it had to make a higher high than the previous stick. This blue box had to be in the upper 1/3 of the candlestick, and I'm using an 8-range candlestick here. The sequential decline is set up to where, like I said, it had to make a higher high. The blue box had to be in the upper 1/3. Then I had to have, and if I do get a sequential decline, and I got it set to where this will appear even before the candle's done being made. And it can disappear if the price comes back up and changes the numbers in here. Until this candle's done being made, this can change. But as you can see, this way happened already. But 85, 51, 7. See, they got smaller. Fewer and fewer people were going to, buying it. So it measures that to tell you that. So that's one of the things I looked at. The next thing I look at is I like to see aggressive selling coming in the bar. And we had not only the sequential decline, not only the high volume box in here. And if you look at some of my older videos where I was using Rancho Dinero, that blue box I was talking about at the end being in the upper or the high volume box. And some people call it the COT, Commitment of Traders. And there's a reason, sometimes it is where traders have committed themselves, meaning they got in thinking the price was going to go higher. But this could also mean that there was somebody that was short the market and had a stop up here, and they could also be stop orders that are getting filled to get out of the market. So one has to learn the context of the situation as well. Again, this is a simulated trade for me to explain this situation. For me to get in a trade, it has to be just because I see all this doesn't mean I'm going to take the trade. It has to be at a critical level. It has to be testing a level for me to get in. And I believe this one was testing a level. Let me turn off this. Yeah, it tested 49.46. Now, if I know I'm in a good downtrend for the day, and I have to know, I mean, not know, but high probability that we're in a downtrend on the day, then I'll look for pullbacks on these little swings right here. All right. And as these swings get tested, then I'll look for, like these little pokes above these previous swings, I'll look for the sequential decline. We had one back here at 9:30. Let's back up just a little bit here. Turn off the money thing here to 9:30. All right. And I would have probably took this one as well, because now it didn't have the sequential decline in it, because you can see it went from 25 to 50 to 33, so it didn't have that. And I don't know if you can hear that doorbell going off, but I have no idea why that's going off in NinjaTrader. I have no alerts set at all, and it's been doing it for months now. But anyway, all these buyers right here in the wick area, and then the candle closed. All right, that told me that all these buyers got absorbed by limit orders. Somebody kept putting in limit orders to sell to absorb this, because price moved back down, leaving them behind and leaving this wick here, and I would have been in at 49.37. Now that's the older way I done it, and then the delta here, and I'm trying to get them to change the delta stick here to show, because this is showing negative delta in this stick. But to begin with, it had positive delta in it. If you'd have been watching it live as the order flow come through, the live water moving, the order is flowing like water, this stick would have been green. If they would put a wick here showing the high water mark of where the buyers had control at one point, and then the sellers came back in, I'd like to see them do that in there. Rancho Dinero has that, and I'm thinking about getting Rancho Dinero again just for that, but it's $1,300 to buy one or two indicators I'm going to use. All right, back to the trade was on right here. It's still working. Let me put it back up here so you can see it. Oh, well, there it is. It's done disappeared is the reason. Okay. All right, I got an ATM strategy, and I just use my old ATM strategy where I have usually a 15-tick stop, then I move it down within 3 ticks of the swing high I just made. And that's the ATM strategy I'm using. Now, I did a little different strategy on this one because I'm using the sequential decline. I'm using the high volume box and all this. Now, normally I would have been in at 49.44. But this time I was in at 49.46, which is right here. All right. I seen the blue box had been made at that point in time. I got the sequential decline, but I know all this could disappear. So when it pulled down and then it started to pull back up into the second candle, and it was up here, I placed an order at 49.46. I wanted it to get back down into these these aggressive sellers is what I wanted it to do. And I wanted to get as close to this COT as I could, and then my stop would be just above the COT, 3-4 ticks above, which I had a 5-tick stop eventually. I brought it down and had 5-tick stop on this trade. All right. Now, the ATM strategy that I'm using is for my other strategy, and it moves my stop to break even once it goes 20 ticks in my favor, which it already, it did there because it moved down and done it. Now, I haven't worked out a strategy for this or anything like that. Kai, the inventor or the developer that helped make this NOFT indicator, they have a strategy for this that they're using where they have 5-tick stops using something similar to what, I'm not sure I'm telling you exactly how they're doing it, but it's something similar to how they're doing it. They're also using, I don't think I have, well, I have one for the ZN over here. I don't have one for crude oil, I don't think. They're using the low volume areas and high volume. This is ZN now. This is a 10-year note, and this is basically what I trade most of the time. But most people's interested in crude, so I explain that. These low volume areas, I'll go in and I'll take and I'll go to drawing objects, and I'll go to horizontal lines, and then I'll pick a low volume area out here, and I'll put a green line on it. Now, price, there was less interest in price at that level. So price we generally hold up and turn around at that level too, or that's where they look for their trades, these low volume areas. Now I'm not explaining it exactly the way they do it. I believe they take the highest high in the volume profile, and then they move out to the lowest low, and then set the volume for the low volume area. But I generally mark them all, and I'll look around that area for it. And I look for support and resistance. This is ZN. I don't want to get off onto another type trading method. I don't use the NOFT with the ZN because it's a very liquid market, where the crude oil has right now has 2 at the ask, 3 at the ask, 27 at the bid. You know, the other one, the ZN will have 500 to 1,000, where crude oil only has 2 digits. It has 3 and 4 digits of liquidity, and it's a big difference in how the markets move. All right. So we look for higher high. Let me think if I missed anything. I think that about covers it in the situation. I could show you where it's probably going to hit this other profit target. And if I was really trading this crude for real, let me look and see here. Like I say, it's a simulated trade. All right, we are testing a level right now. If I bring an 89 range chart over here, and you could look to take profits right around that level we're at right now, because it could reverse off that level. And this swing low was taken probably off a 34 range chart. This is an 89, but you get the bigger picture of where prices moved up. The red lines are where I got drawn on here, are off of a daily chart. And I like to look for trades when price gets to the red lines I draw on here. Now I draw them off, like I say, I'll bring a daily chart. I had to use a 440-minute chart this time because the other ones wasn't working for me for some reason. But this is a daily chart, and when price gets to these red lines,
filled.
There, target got filled. I look to sell in that area, and then my runners have a much greater chance of making me over $1,000 if I wait till per contract. If I wait till it gets to a swing high or swing low on a daily chart, and then take a trade. And then I will take more trades in the middle as the price moves. If the price is in a good downswing, I will look for, like I said, that the particular trade there I just talked about. I will look for situations like that, but normally I would have been in at 49.44 instead of 49.46. So this indicator will help you get tighter stops, but you still have to. No amount of me talking about this is going to fix it for you. I can explain to you and show you what I mean, but until you actually get in there and start doing it yourself and get the screen time in and practice on your own, will you actually learn how to do it and what to look for to get down to those 5-tick stops and so on. There's no other way. I don't care what anybody says, what trade room, how much money you spend to give somebody. They can tell you, they can show you the door, but until you go through it, it ain't going to happen. All right, so I hope that helps. Somebody asked about if I'd give a little more report on that. I also look at the delta down here too. This, and like I said, it was lower as price tested this high up here where I took the trade at. And I look at the volume. Notice there wasn't a lot of volume compared to previous sticks. There wasn't a lot of volume went into that move either. So I measure energy. How much energy is being put into that move, and for what reason? Is the energy being spent to get out of the market, being spent to get in the market? And at what levels and so forth and everything. I'll take a lot of things into consideration. So you just can't cover everything in one video or in one trade room in one day. It takes quite a bit of time to learn this. All right, that concludes this video. I hope it helps. Trade well out there.